Hey everybody. Sorry. Okay, Forex Factory calendar. I am going to do a wrap up of the week. We are going to talk about a couple of things in the headlines, and then we're going to talk about stocks and how to actually go about finding something worth investing in and just kind of going from there. So I have a few tabs open. It's not a million tabs today. I have 7 tabs open. So we're going to go through first the Forex Factory calendar. All right. So we started out this week with a lot of Euro holiday news on the calendar. So anytime we have news like this, we just know that that particular country might experience some type of volatility. In this case, Swiss franc and the euro as a whole. So not necessarily France and Germany individually. Tuesday, we had rate news from Australia. So this didn't surprise me. It shouldn't have surprised you because anytime the United States increases rates, whatever the United States does, the other major currency countries tend to follow and do the exact same thing. So for as long as the United States continues to increase its cash rate, its interest rate, its overnight rate, other countries will continue to do so as well. And the RBA, whenever they released their statement, just stated that inflation's high, global supply and the chain of how they're able to get their items from China, how they're able to communicate with New Zealand, and then also from Britain. There's just been some disparities there, but they're trying to compensate for that. And that increasing interest rates will hopefully help to keep inflation under control and keep pricing within normal bounds there for a while. Wednesday, we didn't really have a ton of news. I'm not going to talk about it tonight, but on a Zoom call next week, we will talk about bonds. We'll talk about bonds, inflation, and interest rates, how they all correlate, and how to go about using this to determine pricing in the long term for big items, big purchases. So that means core durable goods when we look at it on the Forex Factory calendar, as well as mortgages. So yesterday, we had the rate from the euro. So one thing to think about when it comes to the euro is that the European Union has had a negative interest rate. So anytime a country has a negative interest rate, typically that will put them in the category of being a safe haven. Unfortunately, from the euro, they were not a safe haven, never were classified as a safe haven when they did this, because when they lowered their interest rate and went negative, they were trying to compensate for a huge debt problem that they had going on within the European Union. So now they haven't changed their rate. To actually see the euro's interest rate be positive for once would it would definitely shine a new light on how the euro is going to perform in the future, especially when we start looking at a post-Brexit euro and how the European Union is going to function without having the UK and having the British pound kind of tug a little bit within that same pool of dynamics when it comes to the law and when it comes to their banking. We also had unemployment claims come out. So we had about 24,000 more unemployment claims than forecast. Whenever we start looking at inflation, what's happening in the job market, the slowing of the economy, and what happens when interest rate starts to go up and just the dynamics within corporations, unemployment claims become really important. Last week we had NFP. We know NFP, those numbers were mixed. So as we move forward and as we continue to go through, especially the third quarter of the year, I am not expecting to see unemployment claims be below forecast. I expect them to be at or above. I say that because at this point in time, a lot of companies have cut guidance. If you've been following the fiasco going on at Coinbase and some of these other companies, they have actually rescinded offers that they've put out, in addition to actually just cutting their actual job force and the people that they have within the company. So that's going to be something interesting to just pay attention to note, to look at, and just be aware of as you're looking at the news, as you're looking at articles online, just because we know that if people have jobs, they're making money and they're able to spend. But if people don't have jobs, people aren't able to spend, or they tend to spend less, which means that the economy is going to slow down. On top of the slowing down that's already happening because of inflation, because when inflation's high, people don't spend. And so that on top of the supply chain issues that we're somewhat starting to see become more prevalent now, it's all just going to start piling up and stacking on top of one another. And then today, oh boy, today, geez, where do I start? Consumer sentiment, I'll start there. First of all, it was horrible. We knew it was going to be horrible. I told you guys last week and the last time this number came out that I knew it was going to be horrible because the economy is horrible. The sentiment around the economy is horrible. The news, when you turn it on, is horrible. Even though the news typically doesn't show good things, every time you turn on the TV now, it's like, it's rare that you see something positive. That affects how people respond to these questions. But one of the biggest items that is now going to carry forward for the next month is going to be the CPI news. When this CPI data came out this morning, we already knew, based on how the market closed yesterday, that the market was anticipating something horrible because the market just dropped off. If you look at U30, it dropped like 300-400 points at the end of the market day. It just fell off the cliff. Well, this morning showed why. This news came out pre-market. It came out at 8:30, so it was before most people could actually get in and trade in the stock market. It was bad. So inflation is up 1%. This does not mean inflation is 1%. This means that since last month, prices are up 1%. So if you haven't listened to the podcast about CPI, go listen to CPI. I talk about what it is, how it's measured, all that kind of stuff. But I did actually pull up the report so I could show it to you guys. And here's the thing, and here's the reason why I want you guys to go listen to it and to know what it actually is made up of, is because they talk a lot in this report about energy prices. Energy prices and housing do not make up what constitutes the consumer price index. It talks about shelter, it talks about gasoline, and it talks about food. We know that they have ways of excluding those things because energy prices are very volatile, super, super volatile. We know because energy prices are up 108% this year. Energy prices then turn around and affect everything else in the marketplace. So you have to exclude energy so that you can get a real gauge for what's going on in the market. They did this in this report. It's 37 pages. Feel free to read it if you like. I tell you guys, though, if you don't feel like reading these reports and you don't feel like looking at the charts and graphs, read the first page and then You can pick out some particular sections if it interests you, but then you scroll literally all the way to the end. Sorry, I scrolled too far. Actually, no, I didn't. They reordered this report. I read it online. I didn't actually download the PDF until right before the call. But this, technically the last page, this is supposed to be the last page. It's always typically the last page. But if you read this and you read the very first page, you'll be fine. You'll know everything that's going on with all of this data. One thing that's interesting about what they did with this particular report is that they included alcohol prices. I thought that was kind of funny because on our last Zoom call, we actually talked about alcohol and we talked about stocks if you wanted to participate in that market. So I briefly saw it here. The different categories for how they looked at things, they actually switched this model. If you look at consumer price index reports from around times when recessions were getting ready to happen, they actually switched the model. They switched the model for what food items they start to look at because people switch how they eat when you're getting ready to go into a recession or when inflation is high. So here they made all of these different breakdowns for bread. I've never seen this many categories for bakery products before, ever, for rice, for oats, very few for meat, poultry, and eggs. So typically they would not have had this one item here. They would have just had it, they would have just had all of these items here, but then they would have broken it down even more. Uncooked ground beef, roast beef, steaks, like, you know, you can go down the line and just kind of read what all of these different items are, but they condensed a lot of these. Typically meat would have been about a whole page. Dairy only takes up like 7 lines. That's so unusual. Non-alcoholic beverages are there, snack foods, energy takes up a ton of space. Energy typically doesn't take up this much room. Less energy items, commodities, apparel, medical items, and commodities doesn't take up as much space. Typically, this would be about anywhere from 8 to 10 lines. But remember, in times of inflation and recession, people tend to not get their medications. They tend to not go to the hospital as they should. So if you go back to any consumer price index report from late 2006, early 2007, 2008, 2009, 2010, 2016, even before that, you can go to 1999, 2000, 2001. All those consumer price index breakdowns will look somewhat similar to this. But what does all this mean? Why do we care? Well, because we haven't had a consumer price index at this level in over 20 years. It's been a really long time. Actually, we haven't had a consumer price index report like this, I think, since 1981. 1981, it was war times. So if you think about 1981, what was going on coming out of the 70s and the war and how we were needing to transition the United States to a different model of growth. This is not good. Having consumer price numbers like this is not good. The other thing I want to show you guys is on the website. So the Bureau of Labor Statistics puts this data out. You can go to data tools and then go to CPI inflation calculator. You click on that, it's going to bring up a calculator and just type in $1. And so $1 in January of, 2008 would have the same buying power as blank in May of 2022. I'm just going to change this to December of 2019, because technically you could kind of call that the technical beginning of COVID. So when you start to look at 14 cents, when you really start to think about what that means, when you start to think about the fact that, okay, 14 cent, $1, 14%, like that's over time. That's about 31 or so months. So that's not a good thing. It's actually quite bad. Whenever we look in terms of money that has flowed from the Treasury, straight printing of money into the US economy, that money has to be soaked up. That money has to be reabsorbed back into the Fed. So we know that this money that got printed for COVID, there was a reason why I picked 2019. I picked 2019 because, like I said, this was before COVID. And sorry.
So I guess we're gonna be here.
Mr. Levels, thank you. So whenever you start looking at money that was printed during COVID for stimulus packages are never free. Nothing's ever free. When the government is talking about giving away free money, AKA a stimulus, know that on the back end, somewhere, some way, somehow, they're going to get that money back. They're going to get that money back, and it's always going to be the consumer who has to eat that. So interest rates and taxes are typically the way that they go about getting this money back. And with inflation, you have to think about the fact that a lot of these corporations have government contracts, and they partner very, very closely with the government. So the government is going to say, okay, for every X amount now that you get back, we have to get more of that back because now inflation's higher. We have to try to recoup some of this money back from the people. And typically the corporations are going to go along with it and be okay with it because they're still going to make their money regardless. So they're just going to add a little bit extra so they can still continue to make their profit. I'm going to talk about corporations a little bit more when I go to talk about Roche's topic. But I just wanted to show you guys this calculator. So if you ever just want to figure out what true inflation is like or what inflation is like for a period of time, then you can see it. You can have that there as a reference. All right. So just so that I can close out some of these tabs, 40-year high. So it was 40 years for our CPI data. The Dow dropped 800 points today. So this isn't good for the markets right now because it shows that the markets are scared. And guess what, you guys? We have a Fed week next week. So that means that stocks are just going to kind of be on edge until next Wednesday after the Fed speaks. So I brought that up to say that point. And that's the same thing. All right, so I'm gonna go ahead and start talking about stocks. And Roche, just pick a stock, pick any stock, and I'm just gonna start from the top. as if I didn't know the company and show you like what I would do. All right, Google. Cool. So if I was looking for a company, so I've picked, so you said Google, but like, let's say I didn't even know of a company. There are a couple of ways. I told you guys you could go to ETF database. You could, if you choose to, sit and listen to a business finance channel. As a kid, I used to sit and watch CNBC and just watch the ticker tape and just pick companies or letters that I thought were cool, and I would just go look them up. But Google. So first thing I do is come to Yahoo Finance. I use Yahoo Finance because it is the easiest to maneuver, especially if you are a beginner and you want to have everything kind of like right in your face. I come here and literally just type it in. I know what the ticker is for Google. If you don't know it, you can start typing it. Also, the other thing about Google is that technically now the company's name is not Google, it's Alphabet. But if you were to type Google into the search and it didn't recognize it as the company's name, it would just pull up companies and you would just be able to click it. I am going to go with Google Class A. Google has now been broken up into different classes. So when you pick the company, the first thing I want to look at is the profile. Whoops. I want to look at the profile for the company. Sorry. So I don't care about the price. I don't care if it's up or down. I don't care about any of that stuff. I just want to know the company in and of itself. All right, here we go. So what this profile is going to tell you is going to tell you what sector it falls into. It's going to tell you where the company is. It's going to tell you about all the key executives. A lot of people don't care about this, but you should. We've seen over the past week what's happened with Facebook, aka Meta. You want to know. You want to know these people. You want to know if they're got 1 foot in, 1 foot out. You want to know how long they've been with the company, what their role is, and how invested they are with being in the company. So you just start with those people. I usually go for like the top 4 or 5. After I've researched these people, you can research them, simple Google search. You can go to the company's website. You can go through their filings and their listings and analyze these people and just know who they are, like I said, what they do, all of those things. But the sector that this company falls into is very important. So you want to know your sector because you just don't want to be too heavy in one area or another. But then you also want to know the sector so that you can find out who their competition is. So governance, the description of the company is down at the bottom. You can see how big the company is, where they are, where they operate, what they do. You kind of get a description of the company down at the bottom. And then you also get corporate governance. while I'm on this page, I might not necessarily read it at that particular time that I have this page up, but I will come over here to recent events. 2 very important reports that you always want to go to and look at and read. I don't care how long it takes. I will miss a 5 to 10% move in a stock price over these numbers. The annual report, you have to read this. The quarterly report, you don't necessarily have to read it at that time, but you want to know the numbers. You want to know what's going on within this company, where they failed, where they said they failed, what they plan to do in the future, who they have said is their competition, how they plan to overcome challenges, like any growth potential that they see. Like, you find out a lot of those things from reading a 10K, also your 10Q. So go through, look at those things. So that's like literally the first thing that I do, especially if it's a company that I have no idea about. If it's a random ticker that I see on TV, I definitely go and do my research, read about those things. Because if you tell someone you're invested in a company, oh yeah, I have 100 shares of XYZ stock. Oh yeah, how are they performing? How did they do last quarter? Oh yeah, did you hear their CEO was like blah blah blah? Oh yeah, and they were like lying to you the whole time just to see. Like, you don't ever want to be in a position where you don't know. So after I've gone to the profile, then I go to the financials. So now when I get to the financials, I'm looking to see, all right, what are the numbers? I do not invest in companies that don't have cash flow. That's the first thing I scroll down to look at. I want to know, like, what's your cash flow? I want to know, like, what kind of money do you have sitting in the bank? I want to know, like, I'm starting to look at like all these numbers. I want to know your total expenses. I want to know right here. So I want to know your expenses. I want to know debt. I want to know everything. I want to know what's on your books. Knowing what's on the person or what's on the company's books is super important, because you don't want to invest into a company that has a ton of debt. Like, we could go through, just throwing out another company, Netflix. Netflix has a ton of debt. Actually, the amount of debt they go into for their own in-house production, if you look at the number of subscribers that they would have to bring in and keep in order to just pay for that one in-house production, it doesn't make any sense. They're cash flow negative. Also on this page, when I talked about sector and what the competition is, you will actually find those on the right. So if you just look on the right, it'll say companies similar to. These are companies that function in somewhat the same way that Google does. And then these companies will actually help you to do a comparison of whether or not this is a company you should be investing in or not. And you're doing this by literally looking at the numbers. You're looking at how stable the company is, how much cash flow they have, how much debt they have, and just kind of going from there. Some of the other questions about stocks, I know I've given to you before, but you definitely want to make sure you know why you're investing in the company. I think another, just a major question you have to ask yourself is, what gives this company a competitive advantage? So I'll do the competitive advantage analysis for Google for you based on the companies that are over here on the right. So I'll even scroll up. Yeah, I'll scroll up. So competitive advantage that Google has over Amazon, user base. Everybody uses Google. Google has contracts with the government, all continents. They even have a continent with Russia and the United States on Antarctica. So they are actively on every landmass on this planet. As far as their delivery, as far as what they can get out, as far as their reach, I would just go ahead and say, compared to every company that's here on the right, their reach is greater, farther. The companies that are on the right actually have contracts with Google on their platform, some way, shape, or form. And then when you start to look at SEOs and just how companies want to be seen and ranked and how they want to be found, they go to Google. If you want to be found in the world, go to Google and give Google enough information or money or whatever, and you'll get thrown closer to the top or within those first 2 to 3 pages where people will be able to find you more easily. With Facebook, again, it's just a bigger platform. You're actually able to go through and essentially Google is a bigger version of Facebook and Meta. When you start to look at Meta for where they're going with the metaverse, actually Google is way ahead. If you've read through Google AI and you know they're trying to build this huge neural network, you know they're way ahead of Meta, especially when Meta talks about it taking them 10 years to build out a metaverse. Google plans to have this done by 2025. Apple actually has a contract with Google to co-share data. So they're different, but they're similar. Apple has a physical product. Google lives on that physical product. So Google's everywhere that you go when it comes to an Apple product. Netflix, I don't even really see an apple to apples comparison there. They're not even really, in my mind, the same league. The only way that they could be possibly similar is data collection, and that's it. Tesla, somewhat the same, very tech heavy, data centric. The only other thing is that Tesla has a more physically present product. Google does have some products, but when you start to look at the thought process behind everything that Google does, it's all data. And then Twitter, data is information, and it's literally whatever's on Twitter. If you get it close enough in a Google search, it'll pull it up, or it will pull up a third-party site that has it. So some of these social media platforms are, they have like duplicates, if you could call it like that, that live on Google somewhere in a search where there's a third-party site where it'll pop up. And then Snap falls under the same category when it comes to data collection. The other thing I look at next is earnings. Earnings is super important, because if this company that I'm looking at, let's say I didn't know Google, if Google has not had 5 consistent quarters of growth, I don't want it. I don't want it, because that just tells me that somewhere along the line, the business model is broken. I could go to Apple, I can go to Microsoft, I could go to, let's see, Stryker. There are a couple of other companies, but they have like continuous growth. Waste management isn't that bad. So when you start to look at some of these companies, like the thing of like you really want to look at is their earnings. Also, remember when I was telling you guys about Apple, when we looked at it, there are certain companies that have patterns in their earnings. So we know that Apple tends to be more heavy on their earnings in the first and third quarters of the year. Second quarter is kind of a lull. Fourth quarter might be okay, but it's hit or miss depending on what the release is like in September. And we know they've already done that. So we'll be looking for Apple's earnings in September during the third quarter. to just see how people felt about this information that they just released. And then after that, I do go to the analysis tab. I definitely use this tab to look at a lot of that data that was just in that chart. I'll look at some of it here. And then I will go to holders. Holders is important to me. Holders is important to me because remember when I told you guys, if Vanguard and BlackRock don't hold it, I don't want it. Because that means the biggest money in the world doesn't have it. You go where the money is. So go where Vanguard and BlackRock are. And then the chart, which is your technical analysis. And then you know how to do technical analysis. It's a little bit different for stocks, but that's pretty much what I do. I go through all of those things. I want to make sure BlackRock, Vanguard's holding it. You get at least 5 consistent consecutive quarters of earnings. I want to see who their competition is. I just want to make sure that there's growth, that there's more cash in the bank than there is debt, or it's about the same. And I just want to look at the overall company, make sure that it's healthy. So that's in a nutshell how I go about picking and finding a stock that I want to buy. Hopefully that helped and answered your question.
Cool beans, cool beans. As always, we appreciate everything you bring to the team, Corman. And at this time, I'll go ahead and go over the technical wrap up. All right, cool beans. So, in the beginning of the week, I told you guys I wanted to see the dollar push up to retest our 103 level. And if we broke that level, I would like to see a retest and us push up to retest its previous high of 104, 103, and this high here of 104. And we got that today. So, looking at our currency pairs, um, if I could get to them. All right, looking at our currency pairs, of course, we would have been expecting to see our currency pairs sell off this week because we know that they inversely correlate with the dollar. And so told you guys that if we did get that upward move out of the dollar, that I expected to see Euro USD reach our price level of 1.05. And I told you guys that it would probably be the high impacting news that came out today that was that catalyst to get us to reach those targets. And so we did get that move this week for over 200 pips. So good week on Euro USD. Same thing with GBP USD. Told you guys that I wanted to see GBP USD push down to retest the bottom of the structure. And as you can see, GBP USD gave us a little bit more for a total of 270 something pips, but just to the bottom of the structure to market structure and TP, it was about 222 pips. So good week on GBP USD and NZD USD from the top of the structure to market structure here where I want to see price action come um to the bottom of this market structure in the top of this one. It was about 90 pips. So NZD USD gave us some play as well. Looking at metals, we did see silver push back up to retest silver $21 in the bottom of this structure. And gold, we did see gold push back up to retest previous high. Um, so good week on metals as well. Um, oil is still way above $100. We at $120. We retested the bottom of this structure this week. And if we hold this market structure, the beginning of the new trading week next week, I expect to see oil keep pushing up and retest $29. And you know that our overall price targets for oil is $140. So last but not least, looking at um, U30, Dow Jones Futures. I told you guys that if we broke this structure, I want to see this market structure here retested. And as you can, and as you remember from fundamentals, um, Carmen, Carmen showed us that U30 dropped over 800 points today, which was this move here. And yesterday, we also dropped for about um, 750 pips. And for a total this week of over 1,700 points. And that can't be good. So let me see the percentage on that again. It's like almost 6%, and that definitely can't be good. So yeah, so for the new trading week coming up, we will see how price open up and react to this market structure. And then Monday, markets open. We will look at time and price and see if the markets give us a setup. Looking at our cryptos, we do see that Bitcoin is still holding above my 28,600 level. As long as we hold above that level, um, I don't see a reason to try to short Bitcoin. I would, if anything, be buying up to previous market structure. Um, and looking at Ethereum, let me see something right quick. Yeah, we're probably gonna see Ethereum come on down to retest the 1595 level that I got right here. Because we almost said it. So, um, I wouldn't try to short it though. I would just wait until we reach the level, or go ahead and set buy limits for their back up to market structure. Um, which would be a play for you of about 293 pips. So yeah, almost 300 pips. So that about does it. Ethereum. I want Ape token. Ape coin. Yeah, Ape coin. I want to see her start giving us oh, this the daily. My bad. Let me see something. Oh yeah, okay. So yeah, I'm expecting to see her push back up to retest $5.50, 5.5 right here. And then when it pushes back down to retest this market structure, we'll see if it holds. If it holds, then that would be a buy signal to go ahead and buy some more ape, and look for the push back up to $7.20 to fill in this imbalance in the market. So yeah, that'll about do it for the technical wrap up this week. At this time, I'll stop the recording, and me and Corman will take any questions.